Welcome to a Millennial's Guide to Real Estate Investing. Here is your host, Antoine Martel.
Hey everybody, I hope everybody's doing super well. I wanted to get on here this week to talk a little bit more about turnkey providers and some things to watch out for. My business has been really busy over the last couple of months, so I've been talking to a lot of new clients who are interested in buying rental properties out of state. And when I talk with them, many of them share with me their experiences with other turnkey providers and a whole laundry list of things that have gone wrong in the past. And when they're interviewing me and looking to buy rental properties from me, they share that laundry list with me, and I go through them. And I've on the side been keeping track of all the things that people have said about other turnkey providers and the service they provide and the things that they're actually doing to other investors who are looking to buy rental properties out of state who want to be very passive, and many of these turnkey providers are making it very difficult for them to succeed. So I just wanted to go through and share with you guys, if you're looking to buy turnkey rental properties and you're looking at different turnkey providers, these are just some things to watch out for. And when you're asking for referrals, you may want to ask the people who are giving a referral of that company some of these questions, because that'll be very important for you. And then, of course, if you want to buy rental properties out of state, feel free to reach out to me. I can share with you some information about the markets that we invest in. If you're interested in other markets, I can share with you some companies that I've heard great things about in other markets as well. First things first. So I have about 9 things that I want you guys to watch out for when you're talking to turnkey providers and you're looking to buy turnkey rental properties. Number 1 is low or no inventory. So many turnkey providers are having a very hard problem finding inventory. Just because the market is so hot right now, it's very hard to find any good deals. And therefore, if the turnkey providers can't find deals, it means they can't give you deals as well. Because when they're trying to sell deals to you, they want to make sure that you're hitting a certain percentage return, a 9 or 10% cap rate. Sometimes an 8 or 6% cap rate. But if they can't find the deals to sell to you, then there's going to be no inventory for you. So this is like a most recent problem, is that a lot of turnkey buyers have been coming to me and saying, hey, I used to use this turnkey company, but they have no inventory. And I would share with them, okay, what market are they in? And of course, they were listing off, markets in Texas or Arizona or Utah. And many of these markets are just way too hot right now, Florida as well. So many of these turnkey providers don't have much inventory. So one of the first questions that I would ask a turnkey provider is, how much inventory do you have on a monthly basis that I'm able to buy? And is that on a first come, first serve basis? Do you just sell them to your number 1, 2, and 3 guys? Or am I, as a newbie, able to get in front of some of those deals? Because there's some turnkey providers that are really big who have some VIP buyers lists. And if they have low or no inventory, and especially low inventory, they're just going to go to the top 3 guys, and you're never going to get a deal. So you want to go and talk with a turnkey provider who's actually going to share with you some deals. Before you spend your time interviewing them and learning more about them, you want to make sure that it's even possible for you to get in front of some deals and you're not just there stuck on the back burner, right? So that's most important. The second thing that I would watch out for is large deposits up front. Again, many turnkey providers, they want you to kind of be in their line, right? They want you to be in the back of the queue, and they want to make sure that you're interested and that you stay interested. And one way that they do that is by asking for a large deposit up front. So what many of them will do is say, hey, we know you're interested in buying rental properties in Salt Lake City, and we provide that, and we do a couple of deals a month. And in order for you to get any properties or have any properties shown to you, you need to give us $2,000 earnest money to show that you're interested. And I've heard many investors in the past do this, give the company $2,000, $3,000, $4,000 as earnest money. So the money's not gone; it's in a third-party account, but that money's stuck there for 3, 4, 5 months because there's low. Now the problem is there's low or no inventory. So these turnkey providers, while they're asking you for a deposit, now they don't have any inventory, and now your money's kind of stuck in this limbo. And you don't want your money to be stuck in a limbo and have to beg to get it back out, right? So I wouldn't recommend working with any companies that are asking for these large deposits up front. I would just ask to see some deals. Without that, tell them that you are serious, show them your proof of funds, show them that you have a pre-approval letter, show them that you're serious in other ways. But there's no reason for you to put $2,000 or $5,000 just to see a deal. It doesn't make any sense. Number 3 thing that I would watch out for is turnkey providers who are selling properties without tenants in place. So I see this happen a lot. There's a lot of the big guys are doing this, where they'll actually sell you a property that they just finished the rehab, and they'll sell you the property and they'll say, oh, the rental rate is $700 to $800. But that's a big range, and your bottom line return is going to change a whole lot, whether it rents out for $700 or $800. So a little bit something different between what we do is that we actually sell our properties with a tenant in place. So that's you as a buyer know exactly how much money you're going to make every single month. And a lot of the other guys are not doing that. They're, again, selling them for these rental ranges. And a lot of the times what happens too is these properties will sit on the market for a month or 2 months. And now that's 1 or 2 months that you've just lost rent, right? So you want to buy these properties. Don't close on the properties until you have a tenant in place, until that thing is making money. You're supposed to be a passive investor, a turnkey buyer. You want to buy the cash flow. And why would you buy an asset that's not even producing cash flow yet? I would hold off and wait and hold off closing until you do get a tenant in place. The other thing too with the issue with buying a rental property without a tenant in place is that first month rent typically goes to the property management company. So if the property's on the market for 1 or 2 months for rent, and then the first month is, the fee for the property management company, then that's, 3-4 months that you still haven't made money on your investment property. And you want to make money from day one. You want to get in the groove of collecting rents and, making sure that your property is a valid investment. Because that's 3 or 4 or 5 months that you're just going to be sitting on the sidelines scared to buy another one. So buy a property with a tenant in place. Have the turnkey provider pay for that first month's fee to rent out the property, so that you can start collecting rents right away. And that leads me into my next point, which is don't use turnkey providers who own the property management company. And that's for that same exact reason, right? So they're going to sell you a property that's vacant, and they're going to sell it to you vacant because they want to get that first month's rent for renting out the property. So it all goes back to, find a turnkey provider that doesn't own the property management company and buy a property that already has a tenant in place that's already making money. Another reason you don't want your turnkey provider to own the property management company is that they're going to make recurring revenue from you now, and there's typically a lot of markups on the property management side. So you want the turnkey provider to be vested in your success, and the success should be on the purchase. The continued success should be, you and the turnkey provider's goal. But when the turnkey provider owns the property management company, what happens when you have a bad experience with the property management company? Then what are you going to do? I mean, you're alone. The turnkey provider is not going to refer you to a different property management company. Typically, when you buy properties from these turnkey providers who own the property management company, you have to use that property management company. And again, what if you have a bad experience with that property management company and you want to use somebody else because they're upcharging you and they're not able to rent out the property? You want to go and look for another property management company. Now you have to go and do that homework yourself because nobody's on your side. That's why when we always use third-party property management companies, so that whenever the issue arises where somebody's not happy with the property management company for whatever reason, we can step in and we can, talk to the property management company and explain what's going on and why our clients aren't happy. And then if they are really not happy and they want to find another property management company, we're there to help them find another property management company if that's what the issue is. And that's one thing, you're kind of stuck by yourself if you try to use one of these turnkey providers who owns the property management company. Something else to watch out for is that many of these really large turnkey providers require you to use their banks, and they also require you to resell the properties back to them if you ever want to sell. These are two things that you should never sign up for. There's so many different banks out there, and many of these turnkey providers who require you to use their banks, they're doing that for a reason. And the reason is that they, have a certain appraiser at that bank, or that rate, that bank gives them certain referral fees, or compensates them in some way, whether that means increasing the sales price or, kicking them back some money for referring clients over. I would find a turnkey provider that doesn't require you to use their bank. Typically, you can find, other banks that you've used in the past who can give you a little bit better of a rate. And you also never want to sign up when you sign the contract with the turnkey company. Never make sure to see that you're able to resell the property as you wish, and you don't have to resell it back to the property management company or the turnkey provider. And I know it sounds crazy if you've never heard that before, but there are some turnkey providers out there who are requiring their clients when and if they ever want to sell, that they need to sell the properties back to them. You should, as soon as you close and you own that property, you should be able to do whatever the hell you want to. You should be able to change property management companies. You should be able to, evict the tenants. You should be able to, just like it was your own property, you should be able to do all of those things. You should be able to use whatever bank you want. You should be able to use whatever insurance company you want. So don't use turnkey providers or property management companies which are forcing you to use certain people. Definitely look at those options, but you can also ask them for other recommendations, and they should be able to provide you that information, and they should really be on your team as the turnkey passive investor who wants to make some good cash flow for the next 30, 50, 60 years. Now, something else that I would stay away from is turnkey providers who use ginormous property management companies. There's a few of them out there who, turnkey providers who own the property management company, and the property management company manages 3,000 doors or 5,000 doors. A lot of my current clients have been actually coming from these property management companies. I'd stay away from them because you do get lost in the shuffle, and you become kind of an Excel on a spreadsheet. There's no more relationship between you and the property management company, or you and the property management company and the tenants, just because they have so much on their plate. Their company's all spread out. They have a huge office space for all those property managers, and you just get lost in the shuffle, especially if this is you're just getting into turnkey rentals or rental properties in general. I would definitely stay away from these super large property management companies. With the smaller management companies, I've seen a little bit more hands-on. So there'll be a little bit more hands-on with you as the property owner, and a little bit more hands-on with the tenants. They'll treat the tenants in the right way. They'll be very descriptive in their emails between you and the tenants, and keeping you posted as to what's going on. You can also pick up the phone and call the property management company, the property manager who actually walked the property, and ask them what's going on, how does it look, etc. These larger property management companies with 3,000, 5,000 properties that they manage, that just doesn't become possible because there's so many different property managers, and you got to talk to Bill, to talk to Serena, to talk to Kevin in order to get the information that you want, right? So you're kind of playing telephone with these large property management companies to get the info that you want. The last and final thing, which is probably the most important one out of all of them, is never, ever buy properties over their appraised value. When you're buying turnkey properties out of state, you want to make sure you're paying market value or less. If you're buying the property for less than market value, then that's terrific. That's some built-in equity that you get. Most of the time that does not happen, but you just want to make sure that you're not overpaying for these rental properties. And what I mean by that is, let's say you have a property under contract for $100,000. You're using a bank, Wells Fargo. Wells Fargo sends out an appraiser to that property, and Wells Fargo's on your team, right? So they want to make sure that you're buying a property at fair market value so that they can give you a loan, 80% of the total value of that property, and you'll put down 20%. So they're on your team to make sure that the property is worth that amount of money before they let you spend that and before they loan against that, right? So they'll send an appraiser. Let's say the appraisal comes back at $80,000 and the turnkey provider comes to you and says, okay, you're going to get the loan for on the $80,000 value, but we want you to come up with the rest of the equity up on top of that. So not only will you have to put 20% down on the $80,000 purchase, you also have to come up with an extra $20,000 to make up the difference between $80,000 and $100,000. And trust me, this happens a lot, especially for the large turnkey providers. I'm not sure what they say to get people to do so, but a lot of my clients have come from these companies who have done business that way. And please don't do that. It means you're buying properties that you're overpaying for these rental properties, and typically by a large amount of money. And a lot of the times, the amount of money now that you have in those properties is so much that your cash on cash return actually sinks a whole lot. And you may never be able to get that money out, because if you buy an $80,000 property for $100,000, let's say a family member gets sick and you need to liquidate, now you can only sell that property for $80,000. Your $20,000 just disappeared, right? So you got to think worst case scenario. You don't want to overpay for these properties and be stuck holding the bag. Have the turnkey have the turnkey provider come up with the difference or drop the price for you. What they should be doing is dropping the price for you, or they should be complaining about the appraisal being so low and being wrong, and they should show you why it's wrong. We get bad appraisals all the time. I've had homes that I'm trying to sell for $70,000 that come back at $40,000 when I have $55,000 in the deal. And I share with my client, I'm like, look, I sold this house around the corner for $70,000. Here's one I sold for $72,000. This appraisal doesn't make sense. Here's my numbers on the deal. This is how much I have in the deal. There's no way that, that the property is worth $45,000. I have even more money in the property than that. And your turnkey provider that you're using should be able to show that kind of information. If not, you got to go and talk to somebody else. But that's my final point. Just never overpay for your rental properties. Buy your properties for fair market value. Get good cash flow from them. You make your money on the buy, and you just want to put that 20% down on your loan, and that should be it. You're gonna have some closing costs, of course, but put that 20% down. You shouldn't be overpaying for these properties. Buy them at fair market value with tenants in place that are cash flowing from day one, and you'll be good to make cash flow for many years to come. Thanks for listening. I hope that was informative for you. If you have any other questions about turnkey providers, or you want to chat with me a little bit more about Martel Turnkey, I'd be happy to chat with you guys. You can also reach out to me on Instagram, Twitter, Facebook at Martel Antoine. Feel free to shoot me a DM or send me an email, antoine@martelturnkey.com. You can also go to our website, martelturnkey.com, and check us out. See what properties we have available, see if any of the markets or the returns interest you. If they do, feel free to reach out to me. Would love to chat with you guys. And if any of you guys out there are real estate investors and have some deals under your belt and want to come on into the podcast and talk to me a little bit, I would love to have you. I'm looking for some new guests to come up over the next couple of months, so feel free to reach out to me. Would love to have you guys on the podcast or chat with you guys in general. Thanks for listening. Talk to you soon.